Dunamu, the South Korean fintech firm behind the Upbit exchange, reported a 78% drop in operating profit for the first quarter of 2025. The company's earnings fell from 396 billion won to just 88 billion won. This steep decline is directly tied to a slowdown in crypto trading activity, which has caused a sharp drop in transaction fees, the lifeblood of Dunamu's revenue. Transaction fees make up 97% of the company's income, leaving it highly exposed to market fluctuations. As global demand for crypto trading waned, so did Dunamu's ability to generate consistent revenue. The company's consolidated sales also dropped by 55%, falling from 516 billion won to 235 billion won year over year. Net profit followed a similar trajectory, declining by 78% to 70 billion won. These figures reflect a broader trend in the crypto industry, where reduced trading volume is directly squeezing exchange revenues. Dunamu's financial struggles are not just about earnings, they also extend to customer deposits. During the first quarter, customer deposits on the platform dropped by 11% to 5.2 trillion won. This suggests that users are either withdrawing funds or reducing their. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Exposure to crypto assets. The decline in deposits is a direct consequence of the market cooling and reflects a loss of confidence or activity in crypto trading. The global economic slowdown has pulled both retail and institutional investors away from active trading. With fewer transactions, exchanges like Upbit see their fee income shrink almost in proportion to the decline in volume. This lack of diversification leaves Dunamu and other similar platforms vulnerable during periods of market cooling. Hana Bank, a major South Korean financial institution, recently acquired a 6.55% stake in Dunamu as part of a 1 trillion won investment agreement. This move suggests that traditional banks are still interested in the crypto space, even amid declining exchange revenues. Meanwhile, Naver Financial has agreed to acquire Dunamu in a $10 billion all-stock deal. The potential takeover could signal a shift in how traditional financial firms are positioning themselves in the crypto market. An initial public offering is also being considered for Dunamu, which may offer a new avenue for growth or restructuring. Dunamu's situation highlights the fragility of a business model that relies almost entirely on transaction fees. When trading volume declines, the company's revenue shrinks with it, with little room for cushioning. This is a stark contrast to more diversified financial institutions that can pivot between different revenue streams. For crypto exchanges, the challenge is clear: either adapt to a lower volume market or find alternative sources of income. Dunamu's financial performance underscores the risks of being overly dependent on trading activity. As the market remains in a cooling phase, the next signal to watch is whether trading volume will stabilize or continue to decline. If most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The trend persists, it could force more exchanges to reevaluate their business models. The broader question is whether traditional financial institutions like Hana Bank and Naver Financial will continue to invest in crypto platforms or pull back as the market remains volatile. For now, the focus remains on Dunamu's ability to weather the downturn and whether its potential acquisition or IPO can provide a new path forward. The stakes are high, not just for Dunamu, but for the entire crypto exchange sector, which is still grappling with the realities of a post-bull market.